Hello, and welcome to our video about the GameStop controversy. The GameStop controversy starts on a simple premise about America, and it's this idea that America is self-described as a capitalist free market society where everyone starts with the same advantages and the same playing ground. However, time and time again, the US stock market and its major players have tainted this notion of a free market. But as this market has only worked for hedge funds and large investment firms who pull strings to manipulate it and work in their favor. Now, what we're going to talk about today is a shining moment of this belief being flipped on its head by the short squeeze of the GameStop stock in early 2021, reinforcing that the everyday American's ability to impact the stock market is only in the power of the people coming together. GameStop, a widely known name in the video gaming world. The chain primarily distributes video games and other assorted memorabilia. However, it began to suffer financially throughout the 2010s. In the competition of digital content, GameStop just couldn't compete against the advent of digital sales of video games such as PlayStation Plus and Xbox Live, and other large companies that could perform better and sell the prices lower. So we must ask, why would a middling, failing company become the main center of such financial scrutiny around the stock market? How did GameStop change the way we question the legitimacy of investing and the differences in the power of the people versus massive hedge funds? To start this story, we have to understand what it's like to gamble with millions of dollars, or in other terms, the day-to-day of a hedge fund. Simply, a hedge fund is an organization where a group of wealthy individuals pool together their money and put it into the management of one singular advisor, who will then use that huge war chest to invest in a variety of strategies, consolidating their power into one singular force. One of these strategies that is incredibly common is the strategy of short selling. To put short selling simply, is that when an investor looks at the value of a stock and bets that its value will go down, and when that value does go down, they will make a profit from borrowing stocks originally and then selling them at a lower price. Now, this is something that a few groups of hedge funds were looking at the company GameStop for to short sell. They thought that looking at the company's history, they could continue to short sell the company, betting that its price will go down, and they were right, but only for so long. GameStop's stock price fell as the company reported dismal earnings in December of 2020. However, on January 11th, 2021, when GameStop appointed 3 new directors to the board, Alan Adel, Ryan Cohen, and a co-founder of Chewy, Jim Group, people began to start to have hope for GameStop, and its stock price rose. On January 13th, retail traders, the individuals, not the hedge funds, began to buy the stock, and this increased interest pushed the price up by 50%. Now, this push to purchase was not organic. It was traced back to a Reddit user on a thread called r/Wall Street Bets, and by this Redditor's real name was Keith Gill. Gill had been pushing the stocks since 2019, and he and other forum members cited Michael Burry as their incident of why they thought they wanted to start investing. Michael Burry was an individual who projected the 2008 housing crash and made millions short selling on this projection. Now, moving forward, in a short squeeze, which is what these individuals were doing, the short sellers, the hedge funds, buy into the stock expected to profit during the buyback, but instead the stock price is artificially raised once again by the retail investors, and short sellers buy back early to limit their losses. However, with this increased purchasing, there is further inflating and the stock price continues to go up. Now, this is exactly what happened with GameStop. Hedge funds such as Citron and Melvin had been short selling GameStop, and when the stock began to rise, it continued to go up another 50% on January 22nd. Now, continuing on, the price continues to climb on after hours and pre-market trading opening on January 25th, and going as far as $96.73, double its closing price. Much of this initial rise was driven by individual retail traders, yet also by celebrity influence. Elon Musk tweeted something similar to GameStop on Twitter after the market closed on January 26th, and venture capitalist Chamath Palihapitiya also tweeted that he was investing in GameStop, and their combined influence allowed GameStop to soar to another 140% higher than what it was. On January 27th, the stock opened at $354 a share, and Citron and Melvin, major hedge funds, closed their positions, buying back the stocks at a loss. Citron took on a 100% loss, and Melvin lost 53% of its total investments. We're talking hundreds of millions of dollars. Here is an example of this scenario from the 1983 film Trading Places, starring Eddie Murphy and Dan Aykroyd.
Now,
South on an April 142! That's not right. How can the price be going down? Something's wrong. Where's Wilson? What are they doing here? They're selling, Mortimer. Well, that's ridiculous. Unless that crop report... God help us! Margin call, gentlemen. Well, you can't expect us to...
You know the rules of the exchange, Mr. Duke. All accounts to be settled at the end of the day's trading, without exception.
You know perfectly well we don't have $394 million in cash.
I'm sorry, boys. Put the Duke Brothers seats on the exchange up for sale at once. Seize all assets of Duke and Duke Commodities Brokers, as well as all personal holdings of Randolph and Mortimer Duke.
My God. We're ruined.
This is an outrage. I demand an investigation. You can't sell our seats. A Duke has been sitting on this exchange since it was founded. We founded this exchange. It's ours. It belongs to us.
My God.
Amidst the huge losses, financial executives began to accuse the Redditors who originally published this trend of market manipulation. Now, to understand this greatly, market manipulation is any action that disrupts the supply and demand of the security. In response, though, on January 28th, retail trading platforms such as Robinhood began to restrict transactions for GameStop in an effort to stop the pump, stating that their clearinghouse, the method in which that they show the transparency of their transactions, was so large from the volume of purchases that the only way that they could return to normalcy was by limiting them. This had massive effects on GameStop stock, tumbling it down to $112.25 after reaching a pinnacle of $483. These responses against retail traders are much stronger in comparison to institutional responses to hedge fund market manipulation tactics, showing a very clear double standard. Now, the SEC and other regulatory organizations include insider trading and the common practices of market lunches that also have collusion and mass market manipulation as common practices. So now this outrage that is being voiced by hedge funds obviously comes from a lack of acceptance that their near sketchy techniques are just that they feel that they have some semblance of ownership, and that the lower class, the middle class, individual investors don't have the same claim, as they are not as official as hedge funds. Now, furthering this discussion, the hedge fund claimed that it was improper practice, but the SEC and the regulatory bodies for securities released a statement warning retail trading companies like Robinhood to continue to follow federal law, and that they were investigating the market validity on their own. Every day, retail investors created greater volatility in the stock market, through banding together, causing tremendous losses for hedge funds and confronting the idea that individuals or non-professionals could not impact the stock market. And if you think that any of this is illegal, the SEC clearly denied these accusations. Usually the issue regarding a trend seen like GameStop's case is a matter of fraud. Hedge funds now have to realize, though, that the American public can massively disrupt their operations, and as these actions are not illegal, as long as they are conducted in good faith and in public spaces, which was clearly shown by the Redditors who understood that there was a transparent move to pump up the value. Going back to look at the progression of GameStop, we can see that throughout February, on the 2nd, GameStop fell by another 50% and now continues on a downward trend. Retail investors became increasingly concerned with market reading as institutional investors and hedge funds reacted to the lower price. Typically, in a trend like GameStop's, someone will have intentionally created and distribute misleading information to induce more interest and a higher price or vice versa. This is fraud, and it is incredibly illegal. Yet for this squeeze, there was much more transparency in what the Redditors understood than what one would see in a legal case. Furthermore, in an interview with CNBC, former SEC Chairman Jay Clayton said that from what he can tell, people who were trading GameStop shares were pretty clear about the motivation, referencing, once again, the idea of a communal action towards controlling the stock market is illegal only in the presence of fraudulent activity. Therefore, the GameStop squeeze was genuinely above board in its actions and energy, as Keith Gill and other Redditors made their intentions abundantly clear, which follows the guidelines of the SEC. Overall, what can we learn? We can learn that when people rally to effect economic change of a higher order, hedge funds and the upper class often get scared and try to bend the rules with their greater resources to fit only themselves. The GameStop controversy, the squeeze, and the issues regarding it that the hedge fund brought up all create a very clear situation that America follows a double standard when it comes to its financial market, and that the American people have incredible power when they stand up for themselves and follow and bend the rules the same way that the upper class and hedge funds already do. Thank you.